Welcome back. It was a weak performance from Quess Corp in Q1. The revenue growth has slowed down while the margin pressure continues. We have Guru Prasad Srinivasan, the Executive and Group CEO, and Kamal Pal Hoda, the Group CFO of Quess Corp, who join us now on the show. Gentlemen, morning to both of you, and thanks for taking the time out. Mr. Srinivasan, I want to start with you. You know, in FY23, your revenue growth was quite strong. It was almost 25%. But in Q1, you barely managed to do about a 15% growth. What do you think you would end FY24 with? Will it be slower than the preceding year?
Sure. Thanks. Happy to join you on the show, Soma. First and foremost, in Q1 we have added about 14,000 plus headcount, and on quarter-on-quarter annualized year-on-year basis, we have grown about 14%, 16% year-on-year growth. Coming specific to workforce management, general staffing business, we have added about 13,000 by headcount, and followed by the second largest platform, which is Global Technology Solutions. We have crossed about 100 crore of our first-time EBITDA contribution from that business. And our workforce our operating asset maintenance has been steady and stable. So, there was slight weak demand in Q1, but we are seeing a better Q2 and Q3. The season demands are picking up from few sectors, specifically from BFSI, manufacturing, and some open up on retail happening. So with that, we are estimating, and we are confident that I think we'll be able to grow about 20% this year.
20% revenues in FY24. So things will have to pick up Q2 onwards. Got that. Gentlemen, good morning. Mr. Hoda, if I can come on the margins. In the fourth quarter, you cited a slowdown in specialized staffing and investments in the US staffing business as the reason for margin pressure. But we've seen further pressure in the current quarter. Could you tell us what is the goal? I mean, is 4% the goal here?
Yes, definitely. That's the target that we aspire internally for. And you rightly pointed out, specialized staffing continues to not do well for us. In fact, it is down 73% year on year. And the turnaround that we were expecting in North America is also taking a bit of time, but we hope to break even in North America by Q3. And, that's the target of EBITDA margin.
Can you tell us, on the debt situation, Mr. Hoda, what is the debt currently right now? I think you had said in Q4 that your debt has come down by about 57 crores or so, and it was somewhere to the tune of a little over 500 crores. But at the end of Q1, where does it stand?
We further reduced our debt by 15 crores. Cross debt, we have further reduced by 15 crores during Q1. And we are pretty comfortable from where it was. So if you look back 2 years back, we were actually at a 1,300 crores debt level. We have come down to, sub 500 levels, and we'll continue to reduce debt levels from this point onwards.
So how much do you think your debt levels could get reduced to by the end of FY24?
We expect to at least cut our debt by minimum 100 crores this year.
Okay. Mr. Hoda, just to go back to that margin point, do you think you'll do 4% this year, or is there a chance that you perhaps fall short? Do you want to kind of guide the market a little lower, or you'd want to stick to 4%?
See, we aspire to exit this year, touching almost 4%. And this is also on the backdrop of all our 4 platforms, firing full throttle. The most important in this would be to also, get product-led business and found it to get into a break-even by exit of Q4. So definitely Q4 exit, we are targeting internally a 4% exit for all platforms put together.
Okay. Mr. Srinivasan, just very briefly, the global tech solution business, that is doing well. I think that's achieved the highest EBITDA of about 100 crores, margins of 18%. Could you talk to us a little bit about that? I mean, what's the potential here?
Sure. We have 3 set of businesses under Global Technology Operations. One is the customer lifecycle management and IT services, and we have the platform-based business. What is contributing to our margin expansion is from our international customer lifecycle management. So we have grown almost 21% in 1 quarter in our international BPM space, which is also a high margin business, which is taking up our margins. The domestic customer lifecycle management business, our contribution we have, we have started. I mean, if you look at our contribution in other space in this particular segment has gone up. So, which is overall, pushing up our bottom line in terms of our EBITDA margin. So, at fairly good growth rates on annual basis. So, with that, we are quite bullish the way our order books are and the kind of market focus that we have through our sales. We are quite confident to grow this on an average at 15 to 17% on annualized basis.
Okay, all right, gentlemen, thanks for joining in and speaking to CNBC-TV18. That's Quess Corp. The stock is down about 3.5% on the back of a slowdown that they saw in their revenue growth compared to what they did last year. Let's slip into a quick break. On the other side, our special segment, It's the Economy. Lata will catch up with Hemant Mishra, the co-founder and CIO at Scoop Capital, and Steve Englander of Standard Chartered to discuss more on the economy.